Hey everyone, I said I'd post a quick chart on something I see on the short term. Well, short term depends on your definition of short term. Um, Medium term, swing. Anyway, it's going to be easier for me to just talk about this on a video than try and post a chart and annotate it. Um, let me change this one sec. All right, I've expanded this out. So we had this long range, then we had a move up that came back and tested the range, and then we've gone up and past that, and then we've come back and tested that. Um, so what is this pattern? Well, people hate waves, so I hate to mention waves. So you're familiar with Elliott wave. I don't use that. So I developed my own wave. Just we could call them Davidson waves after my surname, whatever. But it's very different. There's a lot of differences. Some point people have asked me. I probably need to write them down and explain them. But basically here, without going into it all, we'll call this wave one up. Most people are familiar with the idea of waves one, two, three, four, five. So one, two. See my mouse. Wave one, two, three. And this is unusual because we don't often see subwaves very clearly. But if you see here, one, two, three, four, five, very, very clearly. Now, what I look for in Davidson waves is certain price and time relationship. So if you look at the height of this wave, as one, it's equal to the third wave. These waves are the same height. This is an important thing that we're going to come to here. And then we get, and typically in Davidson waves, what I'm looking for is a what we call a flat in the fourth wave position. Okay, and that's what we have here. So we have this A, B back up, C down, this flat, and then we get another wave up. Now what I'm looking for is for this to be approximately to be wave 5 and to be half the height of these two waves because they were equal now. Why is that? Well, that's sort of in Elliott wave, but this is also true in real world where you get this pattern and you get this flat, and then this fifth. This happens very, very large number of times. Forget waves. It's just like a price pattern. And what would that mean is that this wave should be the end of this entire up move here. So what I'd be looking for here is some sort of reversal in this area back down. Now, it is possible still to have more attempts to the upside, but anything that now comes back down and takes out this, this is on ES, remember, 3960 area, which is the wave 4 area, and which is this top of this wave 1, would signal the reversal. So we call a conditional set price setup. If price comes down and takes it out, that triggers it, and that's the setup then for a bit decline. It's hard to say where we decline to. We're going to have to zoom out a little bit. And you know the setup is high odds because we have all this price and time proportionality that Davidson waves has rules for. Um, it's going to be very interesting to see whether we get this or not. If we don't, the only reason I could consider that we will not is similar to what's happened on this whole move, which is actually the dollar, which everybody ignores. But really, most of this up move again has been due to something I've gone over for 4 months. The weak dollar. There's a very strong relationship for a year between the dollar and the stock prices. Let's just zoom out a little bit. So we have this the drop. Um, I call this IT decline. It's debatable still. I discussed this in the last update. We are kind of in a neutral IT position, but I don't want to misquote Newton's second law of motion. But basically, that price signal is still in place until this is taken out by a new buy signal, which we still don't have here. It's still in this neutral zone, if you like. So I still favor that this will eventually roll over, and that will be a secondary down move as part of this original IT sell, if that's clear. But um, basically, where there's a time proportionality here, I think this is sort of A, B, C down with 1, 2, 3, 4, 5. And now this is A to here, B, and then C up in a sort of, we could just call this an ascending wedge into some sort of high here. I said it could almost go as high as retesting this, but I thought it would reverse again. It's beginning to look like to me that it won't make it that far. It will reverse somewhere in this neutral zone here, and then I need to see. I try not to predict. We go in the data we have, which is not predicting, is what the data I actually have in real time now can actually be used. Then we need to see the nature of any decline here, if and when this is triggered. If it continues up, well, but then we just have to wait. But this is definitely an increasingly high setup, also because of the position of the signal model. So this is very interesting now to see what happens Tuesday, Wednesday, I think. Now, if this does start to drop, then I say this favors some sort of A, B, and then a C down. But I'm getting ahead of myself, aren't I? So let's just wait and see how this part of this goes. Let's have a quick look at the dollar, what I just mentioned there. And you see the dollar is a literal inverse of what has been happening with stocks. So, you know, this drop here has been led to that support. You know, why that is, that's complicated, but it has been true for over a year. It's not always true, but it has been very strongly true for the last year. So I'd keep an eye on this. And I said in a reply to someone else, the dollar, I'm still think we're in a very important zone now. This 101 down to like 99 on the dollar, where it's very strong support on the weekly, and look for this to be bottoming. So I think, you know, if we zoom this out, you know, we've had a very big drop in the dollar, so that it accounts for most. So again, I don't really. I can't get inside the heads of other people, but I don't really get why people are ignoring this. Like, most of the gains that you've seen in the broader markets is due to the dollar. So you're not seeing it in tech. Everyone's ignoring tech for some reason, like pretending like it didn't just retest its lows or something. And it's mostly to do with the dollar. But actually, it's a very, relative to the drop in the dollar, we should have gotten a much bigger bounce. So I said, you know, what to get a really good tell on our bigger picture context here. I started off talking about the short term, I end up talking about this, but we need to see what happens when the dollar finally gets a major bounce here. I expect that stocks are going to drop hard again, and probably bonds will sell off again. See, until we see that relationship break, the only hope people would have for some sort of bigger recovery in stocks is that the dollar is going to keep falling. But I mean, look at the context of this. We put it on a weekly. This is a huge drop that we have had. Now, without going over all that analysis again, I can repost it. If the dollar does not find a lower around this area, then something else really unusual is going on, and probably means that we're going to see a crisis in the dollar, and the dollar is being sold, which means dollar assets are going to be sold, which means stocks and bonds eventually will be hit. And I said, short term, sure, it's helping this current bounce that started going into Christmas, but I don't believe it will. I think we're damned if either way here on the dollar. If the dollar bounces, like I'm saying, that's going to put huge pressure on stocks again, and the bond market. But if it doesn't, this support that it's been giving, I think, will change. I think it will flip, and I think we'll be in a possible black swan type crisis where, like, all dollar denominated assets start to be sold. Now, I think it's more likely the dollar finds a bottom and bounces. Personally, that's what I've been looking for. It still hasn't happened, but that's really a really important thing that everyone seems to ignore, that I would be keeping an eye on. I will say this looks very impulsive on the dollar. So it looks like 1, 2, 3, 4, and then a fifth wave here. If we go back on the daily, if you take the height of this as wave 1 and this some sort of ABC2, and then a third wave, this looks very much like, again, I said flats, and they always occur in the fourth wave. ABC flat, 4, 1, 2, 3, 4, and then probably a fifth, possible fifth. Sometimes it doesn't happen in real world markets. You often don't get the fifth wave, but possible fifth down into this 99 101 area, which would match the height of wave 1. If you measure the height of that, and 5 should be the same, that will give you a target of that zone. So this is all, I like to use the word nexus. It's a good word. We're getting a sort of nexus of everything coming together here. The dollar, we could look at bonds and commodities. I haven't looked at them recently, but I think I focus on what I think is the most important, which is the dollar and stock relationship right now. So I think we've got a very important week coming up here to get a read of where we're at on everything. And I will say I'm seeing a massive shift in sentiment from bearishness to bullishness again. And we've seen this a sort of week or two before almost every high in 2022. Is 2023 going to be different? I don't think so. That's my position. I do think, because I said that last update, the bounce is a little bit different, our situation. But until I see something change in this relationship, the dollar to stocks and bonds, I'm not going to be convinced that anything has changed, if you like. All right, well, anyway, mostly this was go over that shorter term update, but I think it's worth talking about that. Okay.